Hello friends, how are you? I made a video on the same topic and posted that last week about that is it worthwhile to spend and to invest for rental investment in Canada in 2022. That video was in Urdu or Hindi, but a number of comments we received and they asked that some of my viewers are unable to understand Urdu or Hindi language. So English is a universal language, so why not repeat the same video in English? So here it is, my video, same ideas in English. So friends, as you know, home prices have increased a lot in Canada recently after the COVID, and currently everyone who is a homeowner is seeing a huge increase in the equity growth of their homes. So they are considering that why not unlock their equity and invest it into a real estate market, buy a house for rent, and then make more money in future out of that equity that is locked in their own principal residence. In my previous video, I have already done one video and provided information how to unlock equity from your home, from your principal residence. I have given the link of that video in the description box. So if you haven't seen that video, please go ahead and have a look on it. So let's start. Suppose you want to buy a rental property worth 750,000 Canadian dollars. Now the question comes that when you buy a rental property or investment property in Canada, you have to down at least 20%, and the rest you can borrow from the bank in the form of a mortgage. So the 20% of 750,000 means that you have to put down $150,000 as a down payment. So the remaining 600,000 will be borrowed from the bank in the form of a mortgage. Suppose you decide to go for a 30 years amortization, it means that you take 30 years to pay off your mortgage, and you get an interest rate of 3.8% per annum from the bank on your mortgage. You will be looking for $2,785 per month mortgage payments, which turns out to be $33,420. Okay, but this $33,420 has two portions. One portion is the interest portion, the interest that you pay to the bank against your borrowed amount of $600,000, and the second portion is that the amount you pay towards your principal to pay off your loan. So the portion that goes towards the interest would be $21,480 per year, and the remaining portion, $11,885, will be going towards your principal. So when we look into the cost of owning a rental property, we look at the interest portion only, because the portion that goes toward your payment of the loan is your income that you have, that's your profit that you have made out of your renting, out of your rent. To make cost-benefit analysis, we first have to look into the possible rent, expected rent of that property. So for a $750,000 house, actually you are getting a townhouse, which is about 3-bedroom, living and dining and a finished basement. The rent for that kind of a house is $2,300 a month, which means that you are making $27,600 every year out of your rental income. So now we have to subtract out of that $27,600 the cost of interest, which is $21,480. But remember, there is one more cost, and that cost is property tax. When you have the house, you have property tax, and the property taxes are normally around $300 per month for that kind of a house. So add another $3,600 towards your cost of owning a rental property. I also want to mention here in the description box, I have mentioned there are many hidden costs that I have not discussed in this video, and I will not discuss it. Those includes insurance, vacancy, suppose your house is not rented for a couple of months, or closing costs, which could range up to $10,000 in the current market price. And there is other repair and maintenance costs. So there are many other costs involved in owning a house, but I'm not including those into my analysis because we are talking about 2022, and we want to see if at 2022 prices, if we invest into real estate, do you make any profit or not? All other costs will remain the same whether you buy in 2022 or you buy in 2025. So now we go and do a simple math. Our rental income is $27,600 a year. Interest payment towards my mortgage is $21,480 a month, a year, and $3,600 property taxes. So this means that after doing the simple calculations, we come up with a $2,000 positive cash flow from our rental property. But one thing very important, that do we need to forget about the $150,000 that we put down to buy the property? Of course not, because as you know, economists believe in the opportunity cost of the money. So what is the opportunity cost of that money? Or if you have borrowed it from your home equity line of credit, you will be paying some interest, assuming that interest is 3%, or the opportunity cost of that $150,000 is 3%. So you will be looking at another $4,500 towards your cost of owning the house. Now, if we include that and if we incorporate that extra cost in our calculation, then actually we are making around $1,980 every month negative cash flow. So it means that we will be putting from our pocket on top of the rental income $2,000 every year. So now the question comes, should we pay $2,000 every year from our pocket and rent the house, invest into rental property, and take the pain of dealing with potentially bad customers, bad tenants? Is it worth? It all depends on you. In 2022, we don't know what will be the price tomorrow, what will be the price in next year, or at the end of this year. The price might increase, equity gain could go up, and prices may stabilize, or prices may go down. So it's your decision, it's your personal decision how much you want to take the risk. If you are investing in your rental property for a couple of years, then I would say it's up to you to decide what to do. But my opinion is not to go for 1 or 2 years, because prices are very uncertain. Canadian real estate market is in bubble. But if you are investing for 10-15 years, you are young enough and you can wait for that long, why not go ahead and invest into a real estate market? Because we have seen in Canada, home prices in the nominal term at least always increase. And there could be a possibility of a downturn in prices for a short period of time, but eventually over the next 10 to 15 years, house prices will increase, and you will make some money in terms of equity growth. In another video, I'm going to say that why not invest that much money into a stock? Would you like to do it? That's another video coming. So I stop here. The decision is yours. I'm not a financial planner. I'm not giving you advice. This is just for information. Hope you like the video. If you like it, please subscribe the channel, press the bell button, share the video, and please provide your comments. Your comments are very valuable to me. Till next video, bye-bye.